Greetings, everybody. We have people coming in. We'll wait another minute and then we'll start. Okay. Good day, everyone, from the Illinois SBDC International Trade Center. We are located at the Women's Business Development Center in downtown Chicago on Michigan Avenue. And this is our monthly webinar on an international trade topic. And for those who've joined us before, welcome back. For newcomers to our webinar series, greetings and welcome again. This week this month, we're going to talk about credit insurance as provided by EXIM. So here's the scenario. You're a growing exporter. Maybe you've been exporting for a while. Maybe you've got a couple distributors, and this is typically B2B type of setup, right? You've got a couple distributors in Australia and France and the UK and South Africa and Dubai, and your business is growing. And maybe you've got 20 or 25 distributors around the world, or 20, 25 accounts around the world, and you continue to grow. And right now you're probably doing what most companies do, maybe on cash in advance basis, right? But what if you could offer your products on open account, maybe open account 60 or 90 days? What would that do for your business? Well, what that would do, that'd be pretty positive. And that's what we'll explore today. So I've got to provide you some info about what the background here. I'm at the Women's Business Development Center in Chicago. We're a very well-known, well-established nonprofit. We've got offices throughout the Midwest, been around since 1986, and provides programs and support to women's business owners, and as well as veterans and minority businesses, again, throughout the Midwest. We've got offices in St. Louis, headquarters Chicago, Minneapolis, Kansas City, Milwaukee, and elsewhere. So I'm at the International Trade Center. I manage that, and just consider that I help the clients within the Women's Business Development Center and also other clients outside that center all around the Chicago area. And just consider me an export resource for you. I can help you with your business, help you strategize, help you find channels and do market research. We can connect you with experts like the EXIM people, or bankers, or compliance people, or logistics people to help you grow your business. Everything's free, no fee. It's a government service. So just consider the International Trade Center in Chicago your resource, your go-to for help on international business. My background is I did international business for 30 years, working for various US companies, building and managing their international distribution networks. So taking me pretty much everywhere. I've lived all over the world. I've worked all over the world. And now, and I've been involved in the Chicago area international trade community for a long time. And now I advise companies about the same thing, and I'm glad to do that. So in general, this is how we work. We'll take you through a process of just understanding your business, see if you're ready to export, talk about strategy, develop a plan for you. Then we can do some research, which countries, which markets, which segments. We'll identify those countries and go further. We'll reach out to government assistance, either the state of Illinois or the US Department of Commerce, to help us in these countries and maybe find partners or potential partners to do business with. We can help you with evaluating and selecting those partners. We can help you, and this is what I did in my career, just negotiations with these type of companies, right? How to get started, and help you as you build your international team. Again, that could be a lawyer, that could be bankers, that could be somebody can help you with your IP, etc. And we're there to help you ongoing as needed. I'm part of the Illinois Global Network. I have one foot in the Illinois Department of Trade and Investment, and again, we feed into the Illinois network to help you. And then the main takeaway I want to tell you about what the ITC, what I do, is we're part of a international trade network. I can connect you with the SBDC, the SBA, the commercial service, EXIM, like we're doing today. And so again, we're a resource. So that's it. There's my information. We'll send you these slides. It'll have this information at the end. So you've got, if you're interested in talking about exporting or international, have an issue, or you want to start on the complete export journey, the best way is just to reach out to that email and we can start talking then. Today, again, the scenario is your business is growing, you're getting paid. But getting paid is more of a risk as your international business and you get more international customers overseas, right? What if you could sell on open account and extended terms and maintain minimum risk? What would your customers think? You know what, they'd be pretty happy about that. What would your competitors think? Well, you know, if your competitors are also offering cash in advance and you're offering terms, you've got an advantage. So EXIM credit insurance is a solution there. So today we're going to find out what is it, how does it work, how to set it up, and how much does it cost. We're going to go 30 minutes straight to the point. We'll hang on at the end for questions, and again, we'll send you the slides. So that's our plan. We've got expert speakers from EXIM with us today. I'll let Ursula and Jonathan introduce themselves. I've known Ursula for a long time in the international trade community and glad to have her and her colleague Jonathan today. Again, 30 minutes, and next time we'll come back March 21 and talk about culture in Northeast Asia and doing business in Northeast Asia, and we'll have a link to sign up to this on what we send out later. So with that, I will stop sharing and hand it over to EXIM.
Okay, thank you, Bill. It's great to be on today's platform, and I appreciate all the services that you provide to your members in Illinois. Thank you for joining us today. My name is Jonathan Brady. I'm a business development specialist with the Minority and Women-Owned Business Outreach Group at EXIM Bank, the Export-Import Bank of the United States, also known as EXIM for short. We appreciate your time and attention and hope you'll get several takeaways from today's session to help you grow your exports, whether you're just getting started or taking it to the next level. By way of background, I worked for the Ohio Department of Development, their International Trade Division, for about 10 years, followed by a stint at the U.S. Treasury Department, Office of International Banking. And then before joining EXIM Bank, I was with Export DC, the International Trade Assistance Center of Washington, D.C. So broad background in export counseling and international trade. As Bill mentioned, in keeping with Bill's comments concerning the fact that many of you are busy with the domestic market, we'd like to have you keep an eye on the international market to consider opportunities in international business to help you diversify your customer base. Because markets do ebb and flow, we're going to spend the next few minutes discussing the tools available to you to be strategic in your export growth. Next slide, please. Today's agenda, some highlights, an introduction to EXIM Bank, who we are and what we do, and then I'm going to pass the baton to my colleague, Ursula Vanginovic, the Regional Director and Commerce Account Manager with EXIM Bank. And Ursula will cover payment methods, exporter tools such as export credit insurance, a deeper dive on our credit insurance product, and some suggestions for how to negotiate payment terms. And then Ursula is going to tie it all together with an exporter case study. Now, by way of introduction, EXIM Bank is a federal government agency and serves as the export credit agency of the United States. We were established more than 80 years ago in the 1930s, and Washington, D.C. is the location of our headquarters, supported by 12 regional offices, including one in Chicago. Our mission, simply put, EXIM's mission is to create and sustain jobs by increasing U.S. export sales. We do offer a variety of tools, as you can see, from credit insurance to secure your payment, to guarantees, loan backing guarantees to lenders, financial institutions, to ensure you have access to working capital. Today, we're going to focus on the export credit insurance piece. Next slide, please. EXIM does support small businesses. Small businesses are a priority. No company or transaction size is too small or too large at EXIM. Now, let me draw your attention to the statistic inside the circle, 88.6%. In FY 2020, fiscal year 2020, small business transactions made up nearly 89% of the bank's portfolio. And I know that may be difficult to believe because you typically hear about the large dollar transactions or support given to larger corporations, such as the members of the Fortune 500. But actually, it's the small businesses that benefit the most from EXIM Bank support. How does EXIM supplement the private sector? EXIM fills in the gaps when the private sector is unable to assist. We're here to level the international playing field and to minimize risk. We have tools for risk mitigation purposes. Next slide, please. Now, let's look at where global business takes place. Approximately 95% of the world's consumers and nearly 2/3 of global purchasing power are located outside the United States. Food for thought as you begin or continue to explore export markets and consider ways of diversifying your business portfolio. And remember that exporting provides a pathway to diversification. So at this stage, let me pass the baton to my colleague, Ursula Vanginovich. Ursula?
Thank you so much, Jonathan, and thanks everyone for joining us today, Bill, and thank you for having us. Really just a quick introduction of myself. I joined EXIM Bank a couple of years ago. I started my career here back in the 90s, and kind of in between my two stints at EXIM Bank, worked for international banking on letters of credit, which we're going to talk about very briefly in a moment. Also worked for a freight forwarder, so had an opportunity to work with small, medium-sized companies kind of on various aspects of the export transaction, and spent over a decade working as a trade credit insurance broker. So worked a lot with companies looking at, where do you get protection for your payments, for your receivable, whether that was, domestic back in the day or now working at EXIM Bank, really kind of focusing on foreign accounts receivable insurance. So going to start out with just a quick discussion on what are the options for a payment internationally? And there's more than is up on the screen, but this is just kind of a quick overview and kind of probably the most common methods of payment that we run across when we talk to companies. Cash in advance is, king or, regal. If you can get cash on your sale, that's great because there's no risk to your company of an order cancellation if you receive that with the purchase order. Also, for a lot of companies, that eliminates the need to go separately set up a line of credit to fund your own working capital purposes. But just like with everything, there is some risk with cash in advance. And really the risk here is from a sales standpoint. Did you potentially reduce the size of the order? Or did you maybe even lose it altogether because your customer didn't want to pay you cash in advance? Maybe it's a new relationship and they're not super comfortable with that. Or if it's a distributor dealer, at one point in time, the distributor is going to expect you to support them in that local market. They're really kind of an extension of you in a foreign market. And so they may want you to give them credit because it's just, it's a partnership that you're growing, really. So cash in advance, while secure, potentially has some cost to your company, again, in potential loss of sales or reduction in the size of the sale. Letters of credit are certainly an option. Worked with them as a commercial banker and certainly had tons of exposure as a freight forwarder. Very appropriate for companies who are selling kind of unique product that's custom made. One is, and I'm kind of assuming everybody understands letters of credit. I know that you had a banker on last month talking to you about this, but for anyone who wasn't able to join and listen to the recording really quickly, essentially what a letter of credit is, if you're selling to a customer overseas, let's say in the UK, and you're not super comfortable, this is a new relationship, you don't really want to take the risk of that UK buyer, you ask them for an LC. So essentially they're now substituting your bank. Let's say it's HSBC in the UK that is issuing a letter of credit in your favor. Letters of credit, again, are very good tools, but they do need to be properly structured from your perspective. You want to be able to make sure that you can comply with the terms and conditions of the letter of credit. There's lots of potential areas of the letter of credit that you could get tripped up on. So it is important that you either working with a commercial banker and or a freight forwarder that is handling the shipment for you to make sure that you, again, can comply with the terms of that letter of credit. The downside of a letter of credit is really for your customer. because it is an expensive tool. They have to essentially put up, it's not that different from your customer's perspective than paying cash advance, because they essentially have to put up cash with their bank in order to get that LC issued in your favor. Or if they have a line of credit, the amount of the LC is drawn on their line of credit. So it's eating up their working capital, and they're waiting for potentially 2, 3, 4 months before they're able to receive your product. Especially with shipping these days in the supply chain, the availability of the ships, it's just taking longer to get goods overseas. And so your buyer's working capital is tied up for a longer period of time. So open account, of course, is the whole other end of the spectrum here from cash in advance, where great for your customer, but maybe a little nerve-wracking and loss of sleep for you as a seller, because of course it's a competitive way to potentially sell, but do you really want to bear all the risk of non-payment, either for commercial reason or for political reason? And that's really kind of what we're going to talk about today, is what are the tools available to you to be competitive in those international circumstances. I mean, even domestically, right? We're all accustomed to buying things on credit, and you're probably accustomed to giving credit to some customers domestically. So it's really just kind of extending that to the international marketplace, but looking at credit insurance as a way to protect yourself against non-payment. So what is credit insurance? It's really an insurance policy specific for your accounts receivable. And with EXIM Bank, we focus on just your foreign accounts receivable. There is a whole private market out there that offers trade credit insurance. And I worked as a broker. We wholeheartedly recommend to our customers that they work with brokers, and we can make those connections if necessary. But essentially, we at EXIM Bank are the government, the public sector provider of credit insurance. And again, there's a whole number of companies that provide trade credit insurance, AIG, other names that you're probably familiar with that do it domestically as well as internationally. Our focus is really on the foreign, because as Jonathan mentioned, really our goal here is to help companies grow their exports and really grow jobs here in the United States. So this is our most popular tool, and one that most companies take advantage of. The whole point of credit insurance is, again, to protect your receivable, kind of giving you comfort to be able to give terms. So if your standard payment terms internationally are cash in advance or maybe an LC, this is giving you the ability to negotiate with the customer. Maybe you can give them 50% on terms, if not, 100, but it's really giving you the ability to negotiate payment terms with your customer while protecting you against non-payment for whatever portion is on credit. For a lot of companies, they're referred to us by their commercial banks, because banks will look at foreign receivables and say, domestic receivables we can use as collateral. Foreign receivables we cannot use collateral unless you have insurance on them. So some of you might already have sales to Canada. Your bank may or may not include Canadian receivables in the borrowing base. So for a lot of companies, getting insurance is not just about giving terms and sleeping well at night, but it's also being able to turn existing foreign receivables into cash that they can use. There's a variety of different ways companies come to us, and we don't have the time today to go through all those options, but we are available to talk with you afterwards. Some companies come to us and say, we already give terms to some buyers internationally, we're okay with doing that, but we're entering a new market and we're not really comfortable in giving credit in this new market. So you can come to us and say, I only want to insure this one new customer I have in Mexico, for example. Or other companies come to us and say, we are not taking any risk outside of the United States, and so we're going to insure all of our receivables. And then we have some that come in between, and that's the example that we're going to talk about at the end. So let's quickly review what exactly does credit insurance cover, and kind of really importantly, what it doesn't cover. So what it does cover is political and commercial risk of non-payment. Political is, what's in the news: war, revolution, insurrection, the inability of your customer overseas to convert their local currency into US dollars and remit payment back to you. Could be their import license is arbitrarily canceled. But I'll tell you, most of the time to date, the reason we see claims come in from our insureds is because their customer didn't pay them for a commercial reason. They went into bankruptcy, they became insolvent. Really, most of the time, it's just slow pay. You have a distributor dealer, let's say in Saudi Arabia, who is reselling locally to an end user. that end user doesn't pay the Saudi Arabian distributor, it's like a domino effect. A lot of times they are unable to pay you back. And essentially, when there's a slow pay situation where the buyer can't afford to pay you back, we have a little bit of a waiting period, and then you just file the claim with us. You provide us pretty basic documentation. We want to see a copy of your purchase order, of your final invoice, and a shipping document. And as long as you pay premium, then we can cover that shipment for you. What's important to understand is what credit insurance does not cover, which are disputes. So those are things that have to be worked out between you and the customer. And that's not just EXIM Bank that wouldn't cover disputes. No insurance company is kind of gonna get in the middle between you and a customer about whether or not the product is functioning the way it should be, or it's the right color, or right size, whatever the case might be. Of course, the immediate question we always get is, well, what if my customer is not paying me and they're using the products as an excuse not to pay, like the products, not functioning properly is a reason not to pay. It's a little bit of a longer discussion, but the quick answer is, as long as you follow up with your customer, and here's where we definitely advocate for you controlling the shipment when you give credit, and especially when you're using credit insurance, because you have visibility into when the product arrives. When the product arrives, you should be following up with your customer and saying, hey, here's a copy of my invoice in case you lost the earlier one. We understand that the goods have arrived. Is everything in order? Typically, that's going to happen before the due date and before any credit issues arise, and in which case the buyer might respond back to an email, say it's all good. We'll pay you in 45 days or whenever the due date is. And right there, you've hooked them. Because if there are issues with the product, you should be hearing it at the time of arrival, and not when the invoice has become past due. So wanted to spend a few minutes talking about, what are the couple ways that you can approach a credit conversation with your customer. Some of the companies that we work with are really preferring to stick with their standard payment terms. Maybe that's cash in advance, maybe that's letter of credit, and we wholeheartedly support you in asking for your standard payment terms. But what we would advise is, if your payment terms are, for example, cash in advance, and you're meeting with a prospective customer in Spain, you got to watch the customer's reaction. Some will be direct and say, no, we don't prepay on everything. We expect credit to be given. Some might just shriek at the thought of prepaying you, especially if they don't know you either. Remember, both of you are new, and both are in a risk situation. So you just want to watch your customer's body language, listen to what they say, and be prepared to pivot. So if they give you any pushback on your standard payment terms, we would propose that you say, here's a copy of an international credit application. We will consider giving you credit if you can provide us with the information in this credit application. And Bill mentioned we're going to be sending you the copies of this presentation. This is a direct link to our website with a copy of our sample international credit application. Please feel free to copy, paste away, and use this as your international credit application. It's probably not going to be much different. If you have a domestic credit application, it's just going to ask for some basic information on your foreign customer. How long they've been in business, can they provide a bank reference? Do they have references of vendors, hopefully in the United States or other countries that they do business with? And they're going to send that information to you. And then we can provide you with what we would view as standard questions on trade reference form. So let's say your Spanish customer, your prospective Spanish customer, purchases from a vendor here in Indiana. And the Indiana company gives the Spanish company $10,000 of credit on net 60-day terms. And the Indiana company says, yeah, their terms are net 60. They usually pay us in 90. So maybe up to 30 days late. We would view that as a positive reference. And we would say, based upon that reference, we can provide approval of $20,000 in credit for the Spanish buyer. And we would even go out to 120 days. So most companies are able to get their buyers approved for credit with just one reference. That really is all that we need for credit limits of up to $100,000. Once you cross that $100,000 threshold, then we'll say, hey, can you get us a D&B or some type of a credit report on the buyer in addition? And really, we don't ask for financial statements on the buyer unless we're talking $500,000 or more in credit. So there's really a lot of flexibility. And really the whole point here is you are giving the buyer the opportunity to purchase from you from credit, but the ball is in their court. They need to provide you with an international credit application completed with solid references. If they do that, then we take the next step and we'll talk to you about what type of policy. Is this going to be a one-off, or are you looking to put in place a policy that is going to cover all of your receivables? So the other option is, and we have companies who come to us and say, you know what, we know the international marketplace, we know our competition is already offering credit. So we typically don't do that, but we're ready to take that step and offer credit. And if that's the case, same scenario, you just need to offer an international credit application to the buyer and tell them, look, if you can provide us this information, then we will consider giving you credit. You never want to say for sure, because we really need to check out the references of the buyer and do some due diligence. But what you know and what you want to know ahead of time is, what's the cost of this insurance? Of course, the cost is going to depend on, are you quoting 60-day terms? Are you quoting a buyer in India? Are we quoting a buyer in Canada? The buyer, the length of time, what country they're located in is all going to impact the cost of the insurance. But suffice it to say, most of the time, the cost is going to be anywhere from 0.5% to about 1.5%. So going back to that Spanish example, let's say it was a $20,000 credit that was approved, and we're looking, at 0.5%. Those are, we're talking, $100 in premium, and the cost of the insurance, the premium isn't paid to us until after you've made a sale. So that's the other advantage that we have, particularly over some of the private companies. And as companies are just getting started in exporting, EXIM Bank tends to be a really good fit, because we ask you what you think your international sales are going to be, so that we have some sense of that. But at the end of the day, you're only going to pay us premium on what you actually sold to a customer. So if a sale falls through, or maybe it's lower than what you anticipated, then you're not going to pay us any premium, or you're not going to pay as much. But we wanted you to know what those costs are, because you can absolutely build those costs into your overall invoicing, whether you line item it or build it into your product or service cost. That's really up to you how you do that. The other couple links that we've included in here are samples of invoices and samples of purchase orders. Again, we review a lot of invoices and purchase orders at claim time, and sometimes the issue we have with non-paying our inability to pay a claim is because there's just missing information. And so again, we're just kind of giving you this as an example of what would be a best practice to have in both the invoice and in the purchase order. And of course, you're not the one who's writing the purchase order, but many times companies will write a pro forma invoice that hopefully the buyer can then copy and use as their purchase order. So let's talk really quick about one of our customers that uses credit insurance. Hayes is a company up in northern Michigan that manufactures couplings. They're now owned by another company, but they were a family-owned business for several decades. They basically followed their US customers overseas. So they sold to really household names, Caterpillar, JLG, all kinds of large US companies, sold to them overseas, gave them credit, felt comfort in the fact that they had a relationship with the US corporate. But as they went to these international markets, they saw that there's a bigger market out here than just selling to these US companies. And India was one of the first markets that they were in, and were approached by an Indian distributor dealer who wanted to buy their couplings to be able to store and sell locally in India. And at first, Hayes took the approach that, look, we only take cash in advance. We don't know you. We're not comfortable with you. Of course, I'm not sure that that was the direct message, but just that their standard payment terms were cash in advance. And initially, the Indian buyer was agreeable to that. But then they started pushing, not too long after establishing a relationship, they started pushing, hey, like, we really need to be able to get credit from you. We're your partner here locally. We can't afford to buy more from you because the shipping time and then the time that, you know, they have product in inventory, and by the time they have to give credit to the local buyers. So Hayes came to us and said, okay, how do we do this? How do we give credit? And so they started out with just a single buyer policy with us, because again, they already were selling internationally on credit, and they didn't really want to insure those sales because again, they felt comfort in the fact that those were U.S. household names. They knew the companies. They didn't really want to pay premium essentially on those sales. And so we approved the Indian buyer based on a couple of references. The Indian buyer actually didn't have any US vendors at the time. They provided us with a reference from an Indian vendor and a Chinese vendor. Our underwriters looked at that and said, we see that you've been given as high as $25,000 in credit on net 60-day terms. We're comfortable doubling that. So we approved them for up to a $50,000 limit. Hayes didn't want to increase the terms beyond net 90. And so based upon that, they paid us 1.22%. So it's about $610 in premium for every $50,000 shipment. Now, remember, the shipments weren't always exactly 50,000. So they just paid just that 1.22% for every invoice every month that that shipped. After just a few months of using this single buyer policy, Hayes saw the value in being able to offer credit to some of these customers that they were running across internationally that weren't familiar to them, that were domiciled in those countries, but saw that this was potentially a tool to help grow their exports. And so they set up a policy with us where they were only insuring essentially the new customers. They certainly were not insuring, again, those US household names, you know, in the overseas locations, because again, they just didn't feel the need to do that. So hopefully that illustrates kind of how trade credit insurance works. And, you know, once you start out with one particular policy with us, doesn't mean you necessarily stay in that same policy. And so that was just kind of one illustration. We have many more. Happy to answer any questions. Jonathan and I are both here. And just kind of really quickly wanted to mention that we have another panel coming up here in a couple and a half weeks for International Women's History Month. We have a number of foreign trade commissioners that are based out of Chicago that are going to be talking about their markets, Canada, Cape Verde, Spain, France, I'm missing one. And we have another EXIM Bank policyholder that is going to talk about kind of their experience in working with EXIM Bank. So I'll stop here and hopefully we have some questions.
Well, thanks for that, Ursula and Jonathan. I really like the example that was very clear and illustrative. And my comment is it was a great example. And also, I look at this from a sales and business development point of view. And again, that's what the competitive part of this is. What strikes me is that if you're offering credit and your competitor isn't, you've got an advantage. And so here's a tool to give yourself that advantage. We did have a question that came up, but it was about costs, and you addressed that it varies, and it's 0.5% to 1.5%, which is really good, right? Like, yeah. I think, you know, when I first years ago looked at this, I thought I would think it would be 5%, you know, and that's something like that. The fact that it's about 1% or so is really low cost for a great service. You know what? I don't see a lot else here. Good to be.
Let me just address one more thing as we wait to see if there's any other questions that come up. We have companies who, like I mentioned, come to us who are already selling on credit, and maybe they're getting insurance now because they want to be able to borrow against those now receivables, use it as collateral. And so the question sometimes comes, well, do I have to tell my foreign buyer that I'm insuring my receivable with you? And our answer is no, it's really your choice. We are never going to be reaching out directly to the foreign buyer until and unless there's a claim filed. At that point, all bets are off. But prior to that, really, the insurance is a relationship between EXIM Bank protecting the U.S. exporter. It's really the exporter who's now establishing credit with the foreign buyer, and up to the exporter whether or not they want to disclose that they are insuring their receivables. Some companies have the philosophy that, oh, I don't want my customer to know. I don't want them to think that I don't trust them. I don't want them to think that there's another party that I'll get paid by. I want them to be on the hook and responsible. Other exporters, like Hayes, I know from the get-go was like, hey, we're insuring our receivable with EXIM Bank, so if you don't pay us, the US government's coming after you. It's really the exporter's decision. And also, it may be a different approach with every customer. I mean, your customers are likely not talking to each other, and so you might have a different approach with each customer. So I just wanted to throw that out there. And again, you can build the cost of the insurance into the product, or you can line item it, your call.
You know what? I don't see any more questions. That's our 30 minutes or a little more. And that's good enough. That's the information we wanted to deliver. Again, we'll send this information out. You'll have the contact information to contact myself or Ursula or Jonathan. Beyond that, anything, here's one question, anything from Africa? Well, of course, there's something for Africa, but any comment on that, Ursula?
I mean, same products are offered across the globe. We're open in about 180 countries. There's a link that we can include before you send out of our, what we call a country limitation schedule. It just kind of shows where we're open and where we're not open. So, you know, some markets in Africa, on the African continent, we're open, some, you know, some we're not, but certainly a vast majority is open.
Yes, Ursula, I think just to add, build on what you said, we stand at 42 countries in sub-Saharan Africa, 42 out of 49 total, where we provide support to US exporters. But it is important to check the country limitation schedule because the tenor or time frame varies, short, medium, long term, which ones we actually cover.
Right, right. Ultimately, are we open in the country? Sorry, Bill, is, you know, the first question, but then it's really who's your customer and can we get some credit information on them that gets us comfortable?
I just saw something coming on the chat from the state of Illinois. For you Illinois exporters, the fees, it differs by state, but for Illinois exporters, the fees that you pay to EXIM can be covered by a grant from the state of Illinois. So that makes it even a better deal for Illinois exporters. And if you're interested in that, let me know. Our question, is EXIM the only one that provides insurance?
No, we're not. We're the government's resource for credit insurance. But like I mentioned earlier, there's a whole host of private companies that offer credit insurance, AIG, some Euler, Zurich, Euler, Coface, Atradius are private sector insurers that only offer trade credit insurance. We usually pair our exporters with brokers that are doing business not just with EXIM, but also in the private market. The whole point of using a broker is to make sure that you're getting the best policy that fits your company's needs. This morning, I talked to a company in Wichita that is selling to a UK buyer, but the end user is the Pakistani Air Force. We can't do that because it's the Pakistani Air Force, but the private market can, as long as they get comfortable with this case, in this case, with the UK buyer. So sometimes we, you know, there are some policies, you know, some conditions that we can't operate in, you know, military, so, you know, exports to military buyers is just happens to be an example, but there is a whole private market out there. The difference is that you're prepaying in the private market for the insurance, but always a resource as well.
There's questions coming in now. Can you see them, Ursula?
I can.
Okay.
Yes. So I'm gonna, hold on one second. I think, let's see, is EXIM open to new companies that don't have experience in exporting? We are open to companies who are new to export. That's a great question. Thank you for asking rather. We are though looking for companies who have been in at least the same line of business for 3 years. So maybe your business has been only domestic and export is new. We are open to doing business with you and issuing a policy, but it's not to new businesses. We don't issue policies to startup companies, but we do to companies who have been in business, at least domestically. Let's see. This kind of credit is necessary. Does it extend to any country on earth, even high-risk markets? So, you know, there are markets that are prohibited. Obviously, anywhere in, you know, sanctioned markets, North Korea, Cuba, those are obviously countries that we can't do business in. We're clearly not doing business in Russia. But there are, you know, it kind of depends on what your definition of high risk. So best to check, again, we'll send that link or contact us and we'll go over. Do we support bid or security bonds? We do through another program. Both SBA and EXIM Bank do support security or bid bonds through a guarantee program we have for working capital. It's not through our insurance. And then last question I see, when a buyer is a foreigner who lives and works in the US, but his goods are to be supplied in a foreign country. In order for us to support an export sale, it has to be a foreign buyer, and the goods have to be shipped overseas. So sometimes we run across this where the entity that's being invoiced is overseas, but they have a US factory, for example. So invoice goes to UK, but product actually goes to Tennessee, for example. That scenario doesn't work for us. We actually have to have the goods exported from the United States in order to be able to support that. So that's something that, the private sector again can do, because they are really just interested in whether or not you have a customer that you're invoicing that is creditworthy. And for them, they can do domestic or international. So it's a little different ballgame. Jonathan, there's a question about, does EXIM have any programs for businesses owned by veterans, women, and minorities? I lost Jonathan here, but Jonathan's actually from our Minority Women Owned Business Division, and we track that. There are no special benefits for companies that are minority or women veterans, but have kind of the same benefits as all of our policy holders. I don't know, Jonathan, if you wanted to add on anything to that.
Yes, thanks. First of all, I am a member of the Minority Women-Owned Business Outreach Division, and we're a team of specialists who provide support to minority-owned, women-owned, and veteran-owned businesses across the United States. And our purpose is to ensure an equitable distribution of services to our target audiences. And the umbrella term is simply the underserved business community. So we're here to serve the underserved business community, and our audience members in those groups are welcome to reach out to us if they'd like to schedule a consultation. We're here to help.
And actually, I just pasted into the chat, I don't know if everyone can see, our country limitation schedule. So there was a question, for example, are we open for business in Bangladesh? We are open for business in Bangladesh. That is what we would consider a bit riskier market. So in addition, if you click on the link, it'll say, yes, we're open for short term, so a year or less in credit in Bangladesh, but there are notes there that are significant. And one of them basically says we would need financial statements that are prepared by an accounting firm that is recognized internationally and that uses international financial accounting standards. That's not typical for all markets. So if you looked at Mexico as an example, we don't have that notation, but because Bangladesh is considered to be a bit riskier market, that does, our requirements, depending on the market, can differ. Same thing for Malawi. I think there was another market that was mentioned, Sri Lanka. Let me just, we don't, it's 180 countries, so I have to actually take a look sometimes just as well. So same thing, there's some restrictions in those markets, but ultimately, it will boil down to who is your customer and what kind of credit information can we get on them in order for us to be able to answer that question. There's one more question I see. When a buyer is a foreigner who lives and works in the US, but his goods are purchased for his facility in a foreign country like Nigeria, what collateral would be required? So with credit insurance, there's really no collateral here, which is we're taking a look at the buyer's references, potentially credit report, maybe financials, depending on what market we're talking about, to assess whether or not we think they're credit worthy. And there is really no collateral that we're taking. For our US companies who may have a buyer in Nigeria, or for that matter, anywhere else, and receive a large order and need support from a working capital standpoint because they're either at their lending limits with their bank, or their bank is saying, oh, your customer is somewhere overseas, we're not comfortable with extending you a line of credit, both us and Small Business Administration issue what we call a guarantee. That's to a commercial bank. It's not to your company. And the purpose of that is to get your banker comfortable in extending you a line of credit so that you can build, buy, acquire, pay for labor, anything that's needed to fulfill that purchase order from Nigeria or elsewhere. In that case, it's really a domestic loan that we're guaranteeing to your company here in the United States. And in that case, we would do a full assessment on your company. How long have you been in business? Minimum 3 years. Looking at your cash flow, looking at, kind of your projections as well, taking a deep dive. But again, we need an unrelated foreign company to be purchasing from the United States and product to be shipped from the US to the overseas market. There was one other question. What if the foreign country has no credit in their country from or banking systems in place? An exact country would help to ask. It's, so I don't know if you're referring to like letters of credit. It's likely if there's no banking system in place that we wouldn't be able to extend credit, but it's hard to speculate. It's best if we had a specific country named.
Is that about it? Let's see. Okay. You know what? We'll wrap it up. That was great. Thanks. Thanks again, Jonathan and Ursula. And thanks everybody for joining. I saw everybody really hung in here for the whole session. And again, we'll send out the information, and yeah, join us next month too when we talk about culture in Northeast Asia. So we go from there. All right, everybody. Thanks and have a good day.
Awesome.
Thank you,
Thank you
Bill.
so much.
See ya.
Thanks again.